It's game over for millions of people. Hey everybody, Scott Walters, buckle up, strap in. We got a hard-hitting, pull no punches, no sugarcoating, no rainbows, no sunshine. I'm just going to give it to you and give it to you straight. We got a good one to unpackage today. Game over for a lot of people. There's a lot of things that the data just won't tell you. And I know there's a lot of data chasers. Listen, friends, stay close to the channel. If you're new, congratulations. I believe you made a very smart choice as we continue to ring the bell, sound the alarm, raise awareness, and let people know the biggest artificially induced housing bubble ever witnessed in human history probably isn't sustaining itself. I think now the cat's clearly out of the bag, but there's a lot of things that we don't quite get a read on. Even the data is not going to reveal it. And the realities are this. That's why I've always found myself saying, throw the playbook out the window. The data is not going to save you because this is a much different bubble, very artificial in nature. It was stimulus, right? It was a stimulus measure, stimulus money, stimulus programs. One of those stimulus measures was making real estate agents essential workers and dropping rates, and we created FOMO and herd mentality and bidding wars and a lot of things that we didn't even see in previous bubbles that collapsed the market. So this one had my full and undivided attention. And as an active realtor, I came to YouTube and started warning people. I've always said you want an agent that's willing to earn your business later if you want to sit it out. Not always telling you why you should buy, No, if you want to sit it out, sit it out. Like, I do not blame you. In fact, if we're buying today, I'm going to protect you. That is the only thing I can do. Because you see, I'm greedy in one sense. I don't only want your next sale. I want the one after that and the one after that and the one after that. And I know 95% of all millionaires made their money in real estate. So it's not going to be by owning one house. It's going to be multiple houses. So my job is to create millionaires in real estate. That's just what I'm designed to do because it's what I've done myself. Sacrifice now, ride off into the sunset later. But I took lumps. 2007, I bought a house on its way down and I caught the dreaded falling knife. I had other real estate, luckily, that I'd bought well, but this one, I didn't. And there's nothing wrong with that as long as you learn from your mistakes. But unfortunately, we got something else to talk about today that's pretty serious in my opinion. We're going to have a lot of forced selling for a lot of reasons that nobody's talking about, really, because the data just won't tell you. Hey everybody, a quick break from the show to bring you today's video sponsor, GoldMining Inc. I would never suggest anybody do anything that I'm not doing or willing to do myself. I own gold and I believe you should as well. Let's hear why. Everything is expensive. Gold is perfect for this environment, but it's nearly at an all-time high already. So I want to present a company called GoldMining Inc., trading on the New York Stock Exchange under the ticker GLDG. The reason is that this company trades at multi-year lows, extremely cheap. If you go to wealthresearchgroup.com/cheap gold, there's an entire presentation explaining how this company is effectively 80 or 90% more discounted than anything out there. If you're bullish on gold, I urge you to stop everything you're doing and download this carefully drafted report. There'll be links and information in the description of the video and in the pinned comments. All right, a big thank you to GoldMining Inc. for sponsoring today's show. Always be careful in investing. There's going to be risk. Now let's get back to the program. See, that's why I always say you got to read between the lines and look between the cracks on this thing. Expect the unexpected. Understand the waters that you're swimming in. One of the byproducts of a failing economy is something accelerates, and that something is divorce. Divorce already in just a normal good time environment, right? Even in a stimulus era, 50% of all marriages end in divorce. What do you think happens when financial strain enters the home? Do you think that number doesn't increase? It does. It clearly increases. So we're starting to see now a lot of people come into market for various reasons, but a lot of them are upside down in their purchases. They're going to be done. They're stuck to these houses, and it's really hard. If you're going through divorce and you can't sell the house, you're in big trouble. If you at least have some equity, you can sell the house. But unfortunately, if there's divorce happening, guess what you're doing? You're fighting over money. That's what you do. Anything that can be fought over will be fought over. And it's so sad, especially when there's kids involved. Such a sad thing. I remember having a lot of daddy guilt myself because I've walked in these shoes myself. It's just no fun. But when 50% of all marriages end in divorce normally, you throw in a failing economy, oh man, it's going to spike. So we got more inventory. We're going to look at a house today, courtesy of one of you, a subscriber, that's coming courtesy of divorce. 50% of all marriages end in divorce. Now we're going to put fuel on that fire as homes are now under financial strain. They drank the Kool-Aid, they believed the narratives, maybe some sugarcoating it. Realtor told them real estate only goes up, and it's clearly now flatlining our best. Majority of areas are only going down. It's a race against the clock. I read your messages all the time. You're like, I'm freaking out. I just bought. What do I do? You separate video. I mean, you just got to make sure your house pencils out. Expect the unexpected. At some point, you might have to make arrangements to get away from the upside down anchor of an asset. We'll tackle that in future videos, so please stay tuned because I've walked in these shoes. That's why I'm here with you today, to raise awareness, ring the bell, sound the alarm, let people know. Biggest artificially induced housing bubble ever witnessed in human history is not. Well, I shouldn't say is not. Chances are, I want to say is not because if I was a betting man, which I'm not, that's exactly where my bet goes, clearly. Percentage of likelihood is really low for me on this one, friends, and I'm sure it is for most of you. So today, to drive our point home, let's jump over to a featured property that one of you, a cool subscriber, sent in. Then we're going to meet back here and wrap it up. Let's get started. Hello, Scott, longtime listener to your channel. Would really appreciate it if you broke down this property on your show to see how it pencils out, or likely doesn't. The home sold for $372,000 in June of 2021 when rates were 3%. Now, just 2 years later, they've come back on the market. I was told the owners are divorcing, which is why they're looking to sell. Apparently, they're not that motivated, however, since there's dirty laundry scattered throughout the house. And there it is there. Apparently, this property's hitting the market courtesy of a divorce. So sorry to hear that. Thank you to the subscriber. Let's jump over to our property and take a peek around. And here's the professional photos of our house. Our subscriber went to the open house, and apparently it didn't look quite as good as this, but let's go ahead and get into the numbers. Now let's get into our property's description. And it's not for me so much what it says, it's what it doesn't say. When I see a property description a mile long, it tells me we're overselling the house. I know as a real estate professional, I've only got a few sentences to capture the imagination of a buyer. And when I see this, it's a big red flag. Also, at the very end, you'll see in all caps, sale as is, another red flag. It says these people are unwilling to negotiate anything on this property, and that's another reason they're most likely stuck on the market. Let's keep reading. Next up, we always want to look at days on market. With 151 days on the market, it tells us one thing. We're priced wrong. If you're priced right, you should be going off the market still relatively quick. Let's keep reading. Based on recent sales, today's property comes in with a mid-range value of approximately $428,000. Now let's go ahead and jump over to its price history and see what's going on. Today's property is stuck on the market at $450,000, way above its mid-range value. And they've already done a couple token price reductions, but are still chasing the market. Now let's see how our property pencils out. If we were to give them their $450,000 asking price, our approximate cost to carry the property with a standard amount down at today's interest rate would be around $3,400 a month, and that does not include maintenance and other charges related to carrying a property. Now let's see what its rent range is. And here you go, friends. For me, the true value of a home, what somebody would be willing to rent it for. This property says it has an estimated rent range of approximately $3,200 a month. So for me, I would need our purchase price to come down a little further. Let's get back to the studio so we can wrap this one up. All right, friends, welcome back, and thank you to our subscriber that sent that in. Love each and every one of you. Iron will continue to sharpen iron. Stay centered and surrounded with like-minded people, friends. If you're new, please subscribe. Get on board. We're going to do some great things here moving forward as we protect people. But the reality is this. This is the byproduct of not only a housing bubble, this is the byproduct. Recessionary time, divorce will only go up. If 50% of all marriages statistically end in divorce as it is, what do you think happens when recession? And I know it didn't help my marriage. I was married in the last bubble. It did not help. Why? Because I was the one out there trying to keep a roof over our head. Her job was to run the house. That's how typically families used to work, these nuclear families, right? Kids, you got the wife at home, trying to do your best. But then I was like, listen, honey, we got to tighten our belts. We are on a shoestring. Well, just put it on a credit card. What? No, we can't put it on a credit card. That's putting a Band-Aid on a shotgun blast. That's what's going to come back to haunt us later. And then you just have divide. And it's just no fun. You start to go through this pain and strain. I know many of you are going through that right now. I feel for you. I've walked in those shoes. It's no fun. I don't regret it now. There's certain things I wish that didn't happen, but you can't regret it. You can't live in regret. You can only learn. You can only learn and not do the same thing over expecting a different result. A lot of times we get into rebound relationships. The best way to get over a failed relationship, we think, typically, get into another. No! Get yourself healthy and grounded first. If you need a relationship to have self-worth, you're never going to have self-worth. You need to have self-worth as a single person before you'll be any use to anybody as a couple. In final thoughts, I come to you as a friend, as a content creator, as a real estate guy. I want to see you not only win in real estate, but win in life. Understand the waters you're swimming in now. They're shark-infested. Divorce. Welcome to the swimming pool. This is a byproduct of recessionary times. It's going to spike. We're going to see more and more forced selling come, friends. This is the stuff the data will not tell you. Throw the playbook out the window. The data will not save you in this one. Bigger bubble, bigger blowback. This one had zero organic growth. It was all market manipulation. It's not going to sustain itself. And I'm going to be here to blow the lid off it every step of the way. Because it's not only what we need, it's in fact what we deserve. If you appreciate the content, I want to humbly ask you to give the video a like, subscribe to the channel, leave a comment below. I'd love to hear from you. Social media links in the description of this video if you'd like to contact me there. Along with links to channels I've appeared on I think you might enjoy. If you need help buying or selling real estate here in America, I have the biggest network of top-rated agents in the nation ready to assist you. It would be our honor and our privilege to do so. Email in the description for you as well, or simply reach out to ScottWaltersRealestate@gmail.com. We'll find you there. Also, if you're watching from your television set today and you enjoyed this video, you're going to love the next video. And there's an easy subscribe icon for your convenience. As always, thank you for your time. Please go make it count today. I'll see you on the next video.